And I was,
That's what gets me through the nights, Bill.
all right. Let's see if Burke is I set this up, but I set it up for him to run the training. If I need to, I can. Um, Oh, I think we got our Zactus version 2 added, yay, outside of lending wise. So, oh, okay. Hi, I'm gonna run this training. Okay, I was not prepared to be the one that ran this training, but I will do it. All right, well, good. Hello, everybody. Yay. Hey, Pat.
Hey, buddy.
All right. I'm
I'm
just
keeping my
going
camera
to.
off because I got a bright light in my face.
Oh, Pat, look at that, man. Look at that smile, Pat. That was so pretty. I
Hey,
like that purple.
I'm like
Looking good,
working on
baby.
my lighting here.
Yeah.
It's majestic, Pat. It's majestic.
There you go.
All right. You guys bear with me. Honestly, I wasn't prepared to be running this, so bear with me while I get what is needed to do this. Let me pull some. Let me just pull. I'll pull this file, and we'll just spread this deal. Uh, It's open. Let's close it. Try again. All right. I will share this screen. All right. Can you guys see my screen?
Yep.
We're gonna spread this deal spreading. Um, in the residential world, we look at like debt to income ratio. That's what we're looking at here when we're spreading a file. But we're looking at the debt service. We're looking at the company's ability to service a monthly debt payment. Um, I think actually I'm not going to share the one I'm sharing because this is really intended more. No, I am going to share this one, and then we can talk about it. It's important to know this as we bring on bigger deals. Deals over 500K. This is going to be important to be able to really look at like loans over 500K. We got to look at the business and we got to look at the individual personally. Every time, if the loan is over 500K, does the business have the ability to service its monthly debt payments, and does the individual have the ability to service its monthly debt payments? And then on a global level, business and individual or guarantor, are they meeting the mark? Looks like this template has been used before, so I've got a dirty template. I apologize. Let me clean this template up real quick. We're good. All right, so if you don't have what I'm looking at right now, if you do not have this, please note that I have added this into the shared folder, and you will see it in share file. I will show you where you will find this, but it's important to note that if you pull this up in share file, what I don't know yet is if you say like, let's just do it together. We don't want to. It's under SBA documents and template. This is a clean one. Better be. All right, cool. So let this open. Yeah, this is a clean one. It's important that you download it. Okay, don't edit it and work within here because you'll start ruining the formulas and the set, and then the next person that goes in is going to have a dirty template. It's already been used. So, when you're in here and you need to spread a deal, go over here and download the template and then spread it outside of this area. Okay. Cool. So that's where it is. SBA documents and templates. It's the SBA pre-qual template clean. All right, I'm gonna minimize this screen. I'm gonna pull up my template here and I'm gonna move that over. And oh fudge, I am so tired. All right. What I'm gonna be looking at really is the business. This is the business that's applying. Also gonna pull up the 2022 transcripts for the affiliate. I'm pulling up the business debt schedule, pulling up their personal transcript. And we're gonna get their credit. We'll get that in a moment. Okay. These are what's needed to look at the business's ability to cash flow the debt. So we are gonna minimize that and we are going to bring this over like so. Cool. All right. Everybody can see that? Cool. All right. We're gonna start with the business tax returns. And this is the affiliate. This is my borrowing entity right here. Okay, let me move Sam. Let me move that out of my way. So give you a little bit of background. This right here is a purchase for commercial real estate. So these folks are no longer going to be renting. They want to buy their own commercial real estate. They sent me over a purchase contract for $750,000. They issued a loan request for $600,000. So 10% of 750 is 75,000. Multiply that by 2 is 150. So 750 is a loan request minus 150 is 600. That's the loan amount. Borrower is contributing 150,000 or 20%. Now, it might change. I might be able to work this where they contribute 15 or maybe even 10. But for all intent purposes, based on the contract that I received, I am going to put in a 750 for project cost. Loan amount, they've asked for 600,000. They're contributing 150. Okay. Now, this is for the purchase of commercial real estate. So whenever we're buying commercial real estate, it's not amortized over 120 months or 10 years. You see right here, it says on the right example, CRE up to 25 years. Well, the entire loan purchase is for CRE. So this will be a 25-year term, which is equivalent to 300 months. So I need to change my amortization type so that my numbers are proper. Okay, that brings down my monthly payment to $59.89 per month. It brings my annual debt load to $71,873. That's per year. It's important to make sure our base rate is the present prime rate. Very important. If it's off, even a little bit, it would make all the difference. Okay. So we've got that. In this case, I know I have an affiliate, so I am just going to put in GUA, RDI, Guardian, Angels, Academy. All right, I'm going to put down an affiliate. It was called Drop and Hook. Okay, that's all I'm doing. We're not sending this in to anybody, but I'll show you why I did that in a moment. Okay, business spreads. We would do this if it was a ReadyCap Express and it's a standalone or a prime. Everything that I'm going to do on this sheet right here applies to any express deal that is non-prime. So anything that is a tier 2 or 3, tier 2 being standalone, tier 3 being low prime or global, same thing. We're going to be using what I'm doing in here. Don't worry about the tax year. It doesn't matter. What matters is the cells that are embedded on this column. So I could care less what that says. Sales revenue, I've got a total of 414, 613. My net income is a whopping $2,957. I have an interest add back. So again, when you are a standalone or a global cash flow low prime, okay, or you are a 7A greater than 500K. We are in those instances looking at not just net income, but we're looking at EBITDA, earnings before interest, taxes, depreciation, and amortization. So here's our here's our net income, our earnings, but then we're going to look at before interest. So line 13 is my interest. So we're going to add line 13 back, $2,026. Earnings before interest, depreciation. I've got a total of 97,419. Okay. And amortization. So I know that I have some amortization on this tax return. So earnings before interest, depreciation. Now, where's my amortization? So I've got other deductions, line 19 on page 1. Says C statement 1. They got a total of $128,029. Okay. So I'm going to go find statement 1 in this tax return. Here we go. Statement 1, Form 1120S, page 1, line 19, other deductions. And I'm going to look in here for amortization. Is there any? Well, in this case, there is about 15% or so, plus or minus 5%. You'll see amortization. In this case, I got $13,467. I'm going to put 13,467. So my total depreciation and amortization amount for an add back's 110,886. So now I've got my earnings and then interest, depreciation, amortization gives me total cash flow of 115,869. Okay. Now what I haven't done here is this is very different. Okay. You will not use what I'm about to do on an express, like regular, like working capital loan. Okay. You're only going to use what I'm about to do is if they were buying commercial real estate and they were currently renting. So in this case, this client is presently renting, right? And they want to buy the building or a building. So line 11, rent, 39,623. In this case, you see here, it says plus, this is an add back in this case, because they're no longer going to be renting. They're gonna be buying. So they'll no longer have that payment. That's no longer gonna be an expense. It's gonna be offset by what? That annual payment right there is going to be offset by this annual payment. So I can't leave this there and hit them for it because it's no longer going to be needed. They're not going to be paying that. They're going to be paying that. So I've added it back in my spreads here. Now I've got free cash flow or total cash flow of 155,492 after my 7A loan payment of 71,873 annually. I'm left with free cash flow of 83K. I've got a debt service of 2.16. Okay. We're not done. We still have to go to this tab and we need to look at any debts that they might have. So here's my business debt schedule for this business. Now I'm not going to type these in. I could care less about writing an Ally or Wells. It doesn't matter to me. I am just wanting to see if it cash flows. I'm going to take the total monthly payments of 1424 and just going to drop that right here. When I hit enter, you'll see the annual payment will change to almost 1,800 or 18 grand. It's going to annualize it to 17,088. And if you remember, my debt service before was like 2 and change. It's gone down to 1.75 because it's now taking into account the 7A loan balance annually of 71,873, and then seller and other notes, their debts annually of 17,088. And so it brought my total free cash flow down by 17,000, which in turn brought my debt service coverage down to 1.75, still well above and beyond the 1.2, 1.25, depending on the bank, still well above and beyond their requirement. So from a business standpoint, if this was a ready cap deal, okay, again, we wouldn't be adding this back in like 9 out of 10 times. If this was just a ready cap, 100 to 500K small balance express loan, and we were only doing a standalone cash flow, I mean, we're golden, right? We only need a 1.15, at most 1.25, depending on their E-Trans. So we're golden. Like, yes, on a standalone. Actually, no, we only need a 1.15. That's it. So on a standalone, we're great. We don't have to worry at all. Like this deal is great. We can tell Chloe, yep, it's good. We can gather up all the docs, tell the client, hey, I need, blah, 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 blah. And we tell them by, adding it into, lending wise, triggering, the workflow and having, the automated email go out, letting the client know, congratulations, you've passed. Please upload the, following, documents so we can package and submit your loan for underwriting and approval. Because we've done this, we know. Now, let's say it's a global. Because in this case, I've got to look at the personal because they're going over 500K and they're buying this building. So I have to go to the guarantor side and I need to pull up their personal tax return. All right. Again, don't worry about the year. Doesn't matter. It's the column that matters. Everything in this column is going to transfer over to
We
everything
kind of
that
lost
was.
you for a second there, Bill.
Oh,
Kind of,
can you hear me?
yeah, now,
Something, my mic, I might need a new mic. But you can hear me. Did you, when did you lose me? When I clicked on this tab?
yeah, you said, don't worry about, and I guess like
Okay.
2019 or something.
Yeah. Yeah, don't worry about the year. I mean, this year, like right here, this could literally be like 2065. It doesn't. It changes nothing at all. What matters is that we're inputting it under this column. So the most recently filed tax year, because everything that we put in here is going to also affect cells on other tabs that are needed for our calculations. So I'm dropping in the adjusted gross income, which we see line 10 here on the personal tax return. We have adjusted gross income equal to 83,674. All right. Wages, salaries, tips is going to be right here, line 1, 80,957. Okay. There's nothing else in here for us to add in. All right. You see like right here, it might say other income. And over here, you see other income. Well, guess what? We're not adding 2717 back because we were using that 2717 from this return. Okay, so we're not adding it back. Can't count it twice. Now we got to go to the federal taxes. And we would have to do this on a global for Ready Capital as well. We got to figure out, well, what are the estimated tax liabilities? I'm just going to go down to the second page where it shows 16, the taxes. Okay, 6456. I'm also going to come down here and look down here and say, this is amount you overpaid. This is amount that you're due. Like if it said this is the amount you owe, right? Then this number, they didn't pay enough in taxes. So I would want to add the two together to use a proper calculation. But in this case, they're getting a refund. So they overpaid a little bit. I'm not going to subtract it. I'm still going to use a bigger number. It's better to be over and leave a little bit of padding for yourself. So I'm putting federal taxes of 6456 right here. State income taxes, you can Google this, like, go to like, income tax calculator and you can put in the state and figure out what those would be. In this case, this is the state of Florida, so there are no state income taxes. So I'm leaving it at 0. It automatically calculated the Social Security for me. I'm not changing it. Living expenses, I keep meaning to ask Chloe what they use, and I will get with her on that. We've got to put something in here. Why? Well, because we know, like, we all have living expenses, right? Like that are automatic. Bay First used to use 12,000 per adult and 5,000 per dependent. Okay, I'm not going to do that. Maybe going to do like 10 and 10 and 5 and 5. In this case, I'm going to put 30,000 in here, 10,000 per adult. 2 adults, 2 dependents. Just going to throw 30 grand down as living expenses. Now I need a 1.15 to 1.2 minimum debt service on the personal side. Okay. Right now I'm at 0 because I haven't put any debts in here. So now we have to figure out what are their personal debts. So we're going to pull up the credit report. Content's loading. Just going to scroll down to the bottom. Total payments on their debts. $1,723. I really like these people a lot. They are very low leveraged. So only $1,723 in total debts. So I'm going to put 1,723. And now you see my personal debt service has calculated at 2.15. I am well above and beyond where I need to be. Now we do have an affiliate. That's why you saw over here, I did put an affiliate down, drop and hook. And now when I click the affiliate tab, it's got drop and hook right here. Most recently filed tax return. Okay. Let's go to our affiliate, Guardian Angel Academy. No, it's not. It's drop and hook. I mean, listen, guys, this isn't rocket science when we look at negative 240. Do we think negative $240 total for the year is going to kill our deal? Like, hell no. Not at all. So I'm real. I mean, I didn't even enter anything, but we can go ahead and do it anyways. Like, let's see what it does. So our global numbers here, we got a personal debt service of 215. We have a business debt service of 1.75. We have a global, a combination of the two at 1.82. Somebody write that number down for me, 1.82. Okay. And let's see how that might change when we go to the affiliate side. So the total sales for this company, it started in June of last year, which 59,331. Their net income was negative 240. Okay, they have a total amount of interest. Line 13 was 5,532. So we're going to go 5,532. They have depreciation of 20K, probably a one-time thing. All right, there's no amortization. I know that because I've already looked. So it doesn't, we're not going to go check that. Okay. Sam, what was that number you wrote down?
1.82.
Now it's 2.05. So the affiliate matters. Like, if this number was negative 75,000, all of a sudden, like, this is approaching a level we don't want it to be at, especially when they run a stress test and we're at the minimum 125 needed. So the affiliate matters. If there are affiliates, we can't just overlook it. If Ready Capital is requiring a global, if they're requiring a standalone analysis, then there are no affiliates, right? Like, you can't get a standalone or a prime if there are affiliates. If there are affiliates, you're getting a global automatically. It doesn't matter how high their E-Tran is, doesn't matter how good their credit is, doesn't matter if they've been in business 50 years. Like, they've got affiliates or automatic global. You will want to do a quick analysis and drop those numbers in here if you see a negative. Okay. If you see a positive, prime doesn't matter unless what? When might it matter? Anybody know when it might matter? Like, this number looks good here, but what have we not looked at for this business? Anybody? Anybody have an idea? Take one.
Appreciations.
Now we got that here. Can anybody think of what maybe we didn't add anywhere on here
Their rent
that
or something. I don't know.
that might matter? Anybody see my screen?
So I want to say amortization.
Yeah, they didn't have any of that, but we didn't look at a business debt schedule. We don't know what kind of debts this business has. And presently, I don't have a business debt schedule from them. But what I do have, the balance sheet. So I can pull up the balance sheet and at least see they do have some long-term liabilities and some current liabilities. So I should get a debt schedule from them to determine what their debt load is for this business, just to make sure that the debts a business has doesn't affect this number too much. I'm really not concerned. They'd have to have a lot of debt to bring this number down to a level that would mess this deal up. But this is what we, go ahead.
What is the number that you can't be yet? Your global DSCR?
So we can't be below a 1.15 with ready capital. Now, if the E-Trans score is under 155, then we can't be like under a 1.2. And if it's under 145, we can't be under a 1.25. I mean, I wouldn't worry yourself about that too much.
Okay, cool.
But this is what we're talking about. When we say, hey, like, how do the spreads look? It's doing this right here. Who's got questions on that? Nobody. Cool. Does this
They would probably be
make
endless
sense?
questions, but yes, it makes sense.
Now I want brutal honesty. Matt, was this helpful?
I think yes.
Yeah.
These are always helpful, Bill.
Yeah, I think it was excellent.
Expresses are the ticket, man. Like, you know, the whole 100K fast track, like you all have heard Bert say, is, you know, the dangling of the carrot. That's true, man. Like Lone Bud, we put ourselves on the map because of Fast Track. Fast Track put us on the map. Fast Track got those phones ringing with referral partners, you know, wanting to get signed up left and right because of Fast Track. All right, cool. But now we want to start looking at all these deals for express deals, right? Like, and the best way to look at them for express deals, like you can do it yourself. Like if you've got a debt schedule, you know, from the client, I mean, you could quickly just be like, hey, look, I think there's an opportunity here. If you don't have a debt schedule, like you could just pull this up, throw in 500K max, put in the EBITDA and see like where are my numbers at? Like, dude, like my business, you know, my business debt service, you know, is at like a 3.9. Like, crap, like there may be a real opportunity to get a bigger loan. Like, let me get a debt schedule. Like, let me go back and say, hey, look, like this looks great for Fast Track all day, but I think there's a real opportunity to go much further. Does the business owner need more money to really grow? Or is like 100K like all they really want? Oftentimes, oh, well, you know, yeah, they'd love to have more. They just didn't want to like put a big number. They thought maybe they get declined and, you know, it would be looked at harder. Like I hear that all the time. Like, well, no, that's not necessarily true. Like, yeah, we'll need more documentation, but like if the numbers line up, then the numbers line up. Like it is what it is. The bank's not gonna be like, oh, this person wants 390. Oh, let me find a reason to say no. No, they're looking at these kinds of numbers. And if they line up, they line straight up. So cool. Well, it's 3:33. I'm gonna get off here. I got a little bit more time. I gotta head out of town for a meeting shortly. I'm gonna finish what I'm doing here, but if you guys got questions, give me a call.
No, it was excellent, Bill. Thank you.
Thanks, Bill.
guys.
Can you send out
You got-
can you send out the recording?
I recorded it, so I'll figure out how to,
Appreciate it.
Pat, but yeah,
Yeah,
definitely.
figure out how to send that, please.
Yeah, I'll
Thank
send
you.
it. All right.
All right. Bye.